Hello guys, I welcome you in this wonderful video. Today I want to share with you something very important, more especially when you are trading V75. We can see here we have an interesting move, and in this interesting move we have a lot of key levels. So we have a lot of support and resistance. Then the question is, if you have a lot of key levels, which one should you choose as your most important level so that you can buy or sell in that particular level? So if I can just illustrate with some of the drawing tools, you can see here we have this high which then overlapped into this area with that level, and you can see that price bounced from that high going all the way down, meaning this is where the sellers were trying to begin their impulsive move. You can see the first one, which was not that much successful, and then you can see the second one, which was very huge, and then if you extend this level, because that's what we usually do, we plot support and resistance so that you can make decisions on the future. So if you extend this level, you can see that we have something interesting here with the market breaking out, and if you as a price action trader, if you like to trade breakouts, this was gonna be an area where you are tempted to buy. Why? Not because the price just broke out, but then it gave you very beautiful retest. So we can see that this level was very beautiful because it was retested a couple of times. So it was so tempting for you as a trader to say, okay, I'm buying here. Why? Because we can see here maybe the sellers tried to push down and they failed, then the buyers gave us an impulsive move, and then there was a breakout, then a retest. So you can be tempted to say, okay, I'm buying here, but you need to know that if you observe V75 in all of its cases, you will know that you don't have to react on support and resistance from there and there. Why? Because support and resistance when it comes to V75 is not always fixed. For an example, I will just make few illustrations. You can see below here we have a very important level, and we can see around this area we have also some kind of important level, even if I can extend all the way there, and somewhere around here we can also point out as some kind of an important level. If you can see all these areas that I've just highlighted, the most common thing is that price will usually breach that area. It will breach that area, or it will sometimes just bounce below it. So these two scenarios are very common. So you as a trader, you shouldn't respond only when you see a breakout or when you see a price just touching that area and thinking that is reversing or it is broken. What you should do instead is that you should pay attention on what the price does as it approaches that level or as it is breaking out of that level. Let me make an example. Let's just go a little bit back. I'm trying to drag that tool. I'm sorry about that. So we can see here which example is very clear. Let me come back in this area. So we can see here that, okay, the price was trying to go up, and as it was going up, then it started to slow down. I want you to pay attention into what happened here. The price started to slow down with this corrective wave, and then this corrective wave finished, and then there was a beginning of buyer's move with these two green candles. Unfortunately, these two green candles couldn't make it, and then we have another corrective. So we have something interesting in this area. It is not yet on that level, but it is towards that level. So we have the buyers already struggling before they reach that level. So when we see now the buyers trying again and then giving you a breakout, and then you become tempted from that breakout, you need to know that you didn't follow the rules of momentum, because for you to say a breakout is real, we need to make sure that it is following very huge strength. But here there was a struggle when it comes to the buyer side, but then you trading this breakout, it means that you ignore the struggle that the buyers faced here. So the first rule is that whenever you trade with levels, make sure that you pay attention on what price does as it approaches that level, and never ever be tempted to trade breakouts, more especially when the market is moving in such a movement, because we see here we don't have a trend. There isn't a direction, so it's more like in a range, but a range which is not smooth as well. So the only place where I advise that you should trade breakouts, it is when the market is giving you clear trends, because that's how usually trends are formed in V75. It is formed through breakouts, and then the market retesting that breakout, and then the market retesting that breakout. That's the only place where you should be trading breakouts and retest. But when it comes to ranges like this, you need to make sure that you don't react from breakouts or from key levels there and there. Just observe and wait. You should enjoy making late decision on such scenarios. Even here we can see that the market started moving down and then it broke this level. However, if you reacted from this breakout, you are gonna suffer losses because the price broke and then all of a sudden it went back in. So you shouldn't respond there and there. Just wait and see if there are any momentum signals that will just give you a hint of what the market is likely to do. So I hope this is making sense and this is gonna save you from a lot of losses. So I'm just gonna keep it short and leave it here. Thank you for watching.